Good day. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up, and this is for June 1st, Monday, 2020, right after 6 p.m. Central Time. More protests going on tonight. My prayer is that they don't turn into the looting and the riots that we've seen in Chicago, other cities. I mean, Chicago's just been a disaster. We had 80 shootings, as I understand it, over the weekend. Whoa. The stock market was interesting. You know, with all the news over the weekend, I thought the stock market would be weaker than it was. Now, it's weaker tonight in early trade, so that is one thing. But I really thought that the unrest, the question of when can cities open, I mean, when you look at these looters and you look what's going on there, that's one thing. When you saw the protests, I saw a lot of people without masks. That isn't a good thing. In our city, we were supposed to get restaurants open for the first phase on June 3rd. I don't think that's going to happen now. And so many small businesses were totally destroyed. Why is beyond me. It doesn't speak for Mr. Floyd that you go and you burn down buildings and you break windows and you steal. I don't get it. In any case, we're going to have a week where we set monetary policy out of a number of banks. I know I'm going to be on tomorrow morning on TikTok talking about Australia, what their bank policy is going to be, but we're going to get more of these. We have our own bank coming up next week, I believe it is. They're going to set monetary policy and we'll get a feel for where things are. I'm sure the Fed was feeling better as the market was coming out of COVID and we were opening, every state was open in some manner, and then this happened. It can't be a very good thing. When we look at the XLK, you can see how the market has come up and flattened out. Now, I thought we were going to make an attempt to fill this gap, and I know that I said that. We made a stab at it, but we didn't fill it. So the market has just gone sideways since then. As we look at the current action, we have a pattern of higher lows and higher highs. So the trend is up unless and until 96.22 is hit. If that number is hit, you break this bullish pattern that's in place. But that pattern is like in a circle area. You can almost see it where the market hasn't done anything just yet with it. If you break 96.23, I look for support at 95.26, the first challenge of the 18-day average. Where's resistance if we go up from here? Right above the market, 99.09, the upper Bollinger Band. If you think that band hasn't done its job, better do some paying attention. It's done a very nice job of holding prices within it on this rally. And this rally has been going on since March, right? Actually, right back here. Just unbelievable in the length of this rally. Feels like 2009 to me. I remember when the market took off, and you should, you know, it's only 11 years ago, and nobody believed it was for real, and then the rally went for a decade, so you figure that one. In any case, you have an embedded reading. What's my rule of thumb? If you have an embedded reading, and that takes the market having closes in the stochastic numbers, they're called a K and a D line. For simplicity, we'll call them a red and a blue. And when the market is over them for at least 3 days in a row with both numbers, it's called embedded, it locked in the trend. And that's what you've got right here. So until that's lost, I look for the market to stay on the bull side. The chart action is there too at this point, but I am concerned about that 96.22. When I look at SMH, not an embedded reading. This is a market that's picking up, trying to get there. It's just overbought. Similar pattern to the XLK. Well, obviously there's semiconductors and so on, but higher lows, higher highs, sort of caught in this little circle of action where all of a sudden, instead of the market marching away, it stopped. And there's a lot of resistance at the upper Bollinger Band over you. In XLI, if you take out 66.75, you break this pattern of the higher lows and higher highs, you have the embedded reading. What will I watch? I won't watch if you take out that 66.75. My eye will be on this. If the red number closes under 80 and that happens, that's a sign to me that we're making a short-term top. Why am I talking this way? Because we hit the 100-day average and the upper Bollinger Band, and you just had a breakout to the upside or an attempt at one right through here. Let's see if I can get my charts to do what I want. There we are. So you had 1 day, first close over the upper Bollinger Band, top part of the day's range, and the second day. When I get two of those, I call it a breakout. You'd have to get back under this low to convince me that anything else is happening. And all you did, and you did it right, you ran up then and challenged the 69.69 level. You hit 68.13 as a high on, let me come here. You hit 69.65, I'm sorry. You got within 15 cents, then you came back for the Bollinger Band, and now you're breaking back under it. Nothing wrong with that. The market, as long as it has the embedded reading, even if it hits that, I'm looking at the market going to be potentially bought by the pros until that reading is lost on the slow stochastic. Energy sector, I don't like what I'm seeing. This market's waving back and forth now. So you get here, and let me see if I can get this to work for us. See, there we go. You lost the embedded reading, you had the embedded reading, and you gained it back. The only time you can get it back is the day after it's lost. But it's also a sign that internally the market is starting to waver. And as you can see, we've been going sideways. I am not bearish at this point. I would get bearish if the market gets under 37.95 and it loses the embedded reading. Then I'd be looking potentially to see if the lower Bollinger Band can hold the market. Right here, the bulls are still in control, and they're in control until they lose it, not until you think they're going to lose it. When we come with QQQ, still a bull market, embedded reading, and I still look for the market at the upper Bollinger Band to have the resistance. In the EFA, the emerging market ETF, this is called riding that Bollinger Band. Now, what's the difference between riding and doing what you did in our QQQ? You can see it clear as can be. Riding means you get on that number and you just don't leave go. And it's often accompanied when a market tries to embed, often, not always, but often, and as that happens, it's building up momentum in it. So now this market is cleared for the first time. The 100-week average, it's still caught in an area here, 60.97 close. It's over the upper Bollinger Band of 60.70, and it cleared certainly the 100-day. So we had that breakout where you had the 2 days over and you were in the top part of the range. I'm still bullish. 200-day average, if the market wants to go up, could be where it's going. I will back out of my bullishness if you lose the embedded reading. You always have to have something that is going to back you out of a position. You don't want to get yourself cornered. In GLD, we ended the downtrend today. Now you'll say, what downtrend? And I'll say, if I can get here now to it, let me get back to where I was. Here we are. This was a downtrend. Lower highs, lower lows. Momentum down. I don't think you'd argue with that. The market couldn't make it to the lower band, so it goes back and hangs at the 18-day average. It wouldn't surprise me that on Thursday going home, the pros went short right there. It wouldn't surprise me if their stop is going to be the 163.48 level, right over that high. And as you can see, you reached today, you got over it. So I think you stepped out of the downtrend. You're in no trend now. You have a lower low, higher high, still stuck very much in this overall sideways action, which I hate. I hate when the markets do that because you got to get that drive to the number. Example, let's come back to this. I don't know why my charting software is doing that, but it is. When this market broke down, and the key in the market was right here, if you broke under this low and you closed under the 18-day average, you have lower highs, lower lows. That's where I think the pros are hitting the market late in the day. Why? You got your momentum down, everything's pointing. If it's going to drop, and that's a big if, maybe you get to the lower band. Where would the stop